Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a very balanced market, but the buy side has maintained control. And at this point, heading into the open, as long as buyers can hold ES above the 86.75 to 89 quarter, they can maintain short-term control. And from there, we can see a move back up into the overnight high at 98, a test of the 2100 quarter to 2102 quarter, and potentially a move higher into the recent swing high of 2104.75, and then we also have an open gap at 2105.75 and an HVN at 2106.5. So those levels are very much in play as long as ES can maintain itself above the 86.75 to 89 quarter area. Now, a break below 86.75 short term would tell you that there is some potential weakness coming into this market, but it does not necessarily have to completely change the short-term upside move that we saw yesterday. So below 86.75, we do have support at 82 to 83 and 78.5 to 80.5. And those are really the final spots short-term where buyers can still hold it there and we could still balance in a range and we can still get a move back up towards the 94.95 area, the 98, and the 2100 quarter to 2102 quarter. Now the ideal scenario is that we hold above initial support, but my point is that breaking initial support doesn't necessarily mean that there's a shift in the short-term control from the buyers to the sellers. The buy side can maintain that control from yesterday as long as they at least hold ES above the 78.5 to 80.5 or the 82 to 83. Now a failure at both of those zones would actually mark a shift in the control from yesterday. And in that case, we could see then more selling come into the market. That is not the expectation, but because we are trading within a large balance, it's something that we need to be prepared for. Now on the upside, like I said, if we can hold the initial support area, then we could be looking at a move into the 2100 quarter, 2102 quarter, very doable. And at this point, because the buyers would be in short-term control heading into that zone, we're not necessarily looking to just automatically fade or short that zone. The overnight high is 98, and if we are breaking out above 98 on strong momentum and participation from the other markets on broad market strength, then we may not really get much of a response at initial resistance, and we could be heading higher into that 2104.75 to 2105.75 area. And then the better resistance is when ES gets up at 2107 to 2110 quarter. That resistance zone is pretty likely to hold today, given that we're running on lighter volume. There's not really a whole lot of economic report activity today. And then we have the employment report or the jobs report due tomorrow morning. So most likely ahead of that, we are not going to see a breakout above the 2107 to 2110 quarter zone. So right now, the main idea is going to be to anticipate ES to hold the initial support zone. As long as that happens, we know that the buy side is still intact. From there, we can go up for a test into 2100 quarter, 2102 quarter. Now, if that test happens on some intraday negative divergence or a lack of upside momentum, then perhaps we can get a bit of a response there. That is a decent area of resistance. It's just that if you are heading into it on high momentum and you're breaking out above the overnight high, then it calls for caution. But if you go there in a straight line and there's not that much momentum behind it on the NYC tick, or if you're noting something else that is bearish on the day time frame, then that is a zone that can provide some edge. It's just that we want to be careful shorting it because we know that the buyers would be dominant as the market heads into that area. And then up at 2104.75 into 2107, that's a spot where sell side can be active. And then 2107 to 2110 quarter has potential to cap the upside. And on the downside, we really don't want to see ES breaking the 78.5 to 80.5, and ideally not even 82 to 83. And we hold above those zones. And if we can't hold those, then that would mark a failed breakout from yesterday. And then we could go down and even test the 66.5 to 68.5 potentially, although the range would be quite exhausted in order for that to happen. So those are the main ideas heading into the open. our short-term bias is neutral to bullish, and as long as we continue to see upside momentum on the day time frame, and as long as we're not seeing any major signs of weakness on the day time frame, we are going to continue to give buyers the benefit of the doubt above initial support. If that zone fails, then we need to be a little more careful and vigilant, and then see how the market responds to 78.5 to 80.5, 82, 83. So the only time we would really flip our bias and go bearish on the day time frame is if we saw very clear-cut signs of weakness. For example, if there was unusual weakness on the advanced decline, or the NYC tick was completely holding below zero, or one of the other markets was really cracking down and failing in a bigger way. But absent any major signs of intraday bearishness or weakness, we are going to give buyers the edge here and expect a move up into 2100 quarter, 2102 quarter, and very possible to test the 2104.75 to 2106 half area as well. So those are the main ideas. Let's see if the buy side can hold ES above initial support, and we'll take it from there.